My time has expired. And
Thank you. The gentleman from Texas, the ranking member of the subcommittee.
Thank you, Mr. Chairman. Chairman Bernanke, earlier you were asked a question about the value of the dollar, and you sort of deferred and said, you know, that's the Treasury responsibility. I always find this so fascinating because it's been going on for years. Your predecessor would always use that as an excuse to not talk about the value of the dollar. But here I find the chairman of the Federal Reserve, who's in charge of the dollar, in charge of the money, in charge of what the money supply is going to be, but we don't deal with the value of the dollar. But you do admit you have a responsibility for prices. But how can you separate the two? Prices are a mere reflection of the value of the dollar. If you want to control prices, then you have to know the value of the dollar. But if you're going to avoid talking about the dollar, then all you can do then is deal with central economic planning. You know, if we stimulate the economy, maybe there'll be production and prices will go down. And if prices are going up too fast, you have to bring on a recession. You have to try to balance these things, which I think is a totally impossible task and really doesn't make any sense, because in a free market, if you had good economic growth, you never want to turn it off, because good economic growth brings prices down, just like we see the prices of computers and cell phones. Those prices come down where there's less government interference. But, you know, the hard money economists who have been around for a while, they have always argued that this would be the case. Those who want to continue to inflate will never talk about the money, because it isn't the money supply that is the problem. It's always the prices. And that is why the conventional wisdom is everybody refers to inflation as rising prices, instead of saying inflation comes from the unwise increase in the supply of money and credit. And when you look at it, and I mentioned in my opening statement that M3, now measured by private sources, is growing by leaps and bounds. In the last 2 years, it increased by 42%. Currently, it's rising at a rate of 16%. That is inflation. That will lead to higher prices. So to argue that we can continue to do this, continue to debase the currency, which is really the policy that we're following, is purposely debasing, devaluing a currency, which to me seems so destructive. It destroys the incentives to save. It destroys, and if you don't save, you don't have capital. Then it just puts more pressure on the Federal Reserve to create capital out of thin air in order to stimulate the economy. And usually that just goes into malinvestment, misdirected investment, into the housing bubbles or the NASDAQ bubble. And then the effort is, once the market demands the correction, what tool do you have left? Let's keep pumping, pump, pump, pump. And it just is an endless task. And history is against you. I mean, history is on the side of hard money. If you look at stable prices, you have to look to the only historic sound money that's lasted more than a few years. Fiat money always in. Gold is the only thing where you can get stable prices. For instance, in the last 3 to 4 years, the price of oil has tripled. A barrel of oil, $20, $30 up to $100 a barrel. And yet, if you look at the price of oil in terms of gold, it's absolutely flat. It's absolutely stable. So if we want stable prices, we have to have stable money. But I cannot see how we can continue to accept the policy of deliberately destroying the value of money as an economic value. It's so immoral in the sense that, what about somebody who's saved for the retirement and they have CDs and we're inflating the money at a 10% rate? Their standard of living is going down, and that's what's happening today. The middle class is being wiped out, and nobody's understanding that it has to do with the value of money. Prices are going up. So how are you able to defend this policy of deliberate depreciation of our money?
Congressman, the Federal Reserve Act tells me that I have to look to price stability, which I believe is defined as the domestic prices, the consumer price index, for example, and that's what we aim to do. We looked for low domestic inflation. Now, you're correct that there are relationships, obviously, between the dollar and domestic inflation, and relationships between the money supply and domestic inflation, but those are not perfect relationships. They're not exact relationships, and given a choice, we have to look at the inflation rate, the domestic inflation rate. Now, I understand that you would like to see a gold standard, for example, but that is really something for Congress. That's not my
But
decision.
your achievement, we have now PPI going up at a 12% rate. I would say that doesn't get a very good grade for price stability. Wouldn't you agree?
No, I agree. It's not the more relevant one, I think, is the consumer price index, which measures the price consumers have to pay. And that was last year between 3.5% and 4%, and I agree that's not.
And
not
the PPI is going to move over into the consumer index as well.
We're looking forward this year, and we're trying to estimate what's going to happen this year. And a lot of it depends on what happens to the price of oil. And if oil flattens out, we'll do better. But if it continues to rise at the rate in 2007, it'll be hard to maintain low inflation. I agree.
Thank you.
Rick, what do you make of the market response to what Chairman Bernanke was saying today? And again, we remind everybody we're sitting with the dollar at a historic low against the euro again today.
To me, if you look at an intraday chart, pretty much the second that the chairman grabbed the mic, the dollar slid. And as much as many may not agree with Ron Paul from a political perspective or foreign policy perspective, for the second time in 3 months, when he was talking, people in Chicago were cheering.
The congressman from Texas advocating essentially going back to the gold standard, at least something akin to that.
No, but call it what it is. It's impossible to think that one could worry about pricing issues and not pay attention to the dollar. It's silly, and he pointed